Good afternoon, everyone, and welcome to the third quarter fiscal 19 earnings conference call of Century Plyboards Ltd. I would like to thank the management for giving SBI Securities this opportunity to host the call. From the management team, we have today Mr. Sajjan Bhajanka, Chairman, Mr. Sanjay Agarwal, MD and CEO, Mr. Keshav Bhajanka, ED, and also Mr. Arun Julasaria, the CFO. After the opening remarks, then from management, we can have the Q&A. Thank you.
Thank you, Lakshmi Narayan. Good afternoon, friends. I am Sanjay Agarwal, Managing Director of the company. I have with me Mr. Keshav Bhajanka and our CFO, Mr. Arun Julasaria, and Nikita Bansal, one of the directors. I welcome you all on the third quarter results call of Century Ply. Friends, I think the third quarter was also quite challenging, and the challenging times of India incorporation are not yet over. And it seems that the election mode has totally set in India now. The GST also has done better, but a long way to go. Even in our product, we see that, yes, the tax avoidance has improved, but not to the level we have been expecting or we desire. The MDF capacity utilization in our company has improved, and that's why we are contemplating an expansion, but a decision is not yet taken. Some time back, actually, we had spoken about expansion, but we had put it off for some time. But now that we have achieved about 80 to 85% capacity utilization, we are now quite positive about the future expansion plan. And probably very soon we will be back to you all with a determined, clear-cut plan. Now we find that the particle board is also doing quite well, and the sales and EBITDA both have grown. We are growing in our prelam particle board percentage also, both in particle board and MDF. That's a very positive sign. And that's why the EBITDA has also a little bit improved as far as particle board is concerned. We are also looking at some new expansion plan in particle board in northern India. So with that, I again welcome all of you and hand over to our CFO, Mr. Arun Julasaria, to talk to you with key financial data for current quarter posts, and after that we'll be open for question and answer session. Thank you.
Good afternoon, ladies and gentlemen. First of all, I would like to mention customary disclaimer that this Concall is just to discuss company historical numbers and future outlook. In no way this should be construed as invitation to invest in the company. Results for the quarter, along with the detailed analysis, is already mailed to you and also hosted on stock exchange and company websites. So I will not take much time and take you through only basic numbers and macros. Comparing 9-month results, overall net revenue, including other operating income, increased from rupees 1,423 crores to 1,680 crores, with a growth of over 18%. Out of such 18% growth, 12% growth came from MDF and balance from other businesses. Blended EBITDA margins declined from 16% to 14.3%. EBIT margins remained flattish at 12%. PBT declined from 10.9% to 10.1%. PAT declined from 8.5% to 7.4%. For Q3, on YOY basis, overall net revenue, including other operating incomes, increased from rupees 509.9 crores to 578.89 crores, with a growth of 14%. Out of such 14% growth, 8% growth came from MDF and balance from other businesses. Blended EBITDA margins are now 13.4%. EBIT is now at 11%. PBT is now at 10%. PAT is now at 7.2%. Also, for the period of 9 months ended 31st December 18, total adverse forex movement was 19.86 crores as against favorable 1.34 crore in corresponding period of last year. Total forex impact, therefore, was 21.2 crore on our PBT. Out of total 19.86 crore, 10.34 crore is taken in borrowing cost and balance 9.52 crore is taken in EBITDA. Out of total 19.86 crore, 10.05 crore is realized loss and balance is mark-to-market loss. In order to de-risk ourselves from forex adverse movements, we have continuously reduced our foreign exchange exposure, which now is only 142 crore against 365 crore on 31st March 2018 and 209 crore as on 30th September 2018. Out of the total exposure, around 83% was in US dollar and balance mainly in euro. As on date, almost all our exposure is either naturally hedged or forward booked. In Q3, we have booked a forex gain of around 4 crores. Now coming to segments, while volume of plywood for Q3 increased by 7% YOY basis, the value growth was flat. The difference is due to change in product mix. We are focusing now more on mid-segment products where growth potential is better. Overall, plywood segment is showing degrowth because of substantial lower sale of commercial veneer. Traditionally, we have been operating in prime or upper segment of plywood market. Now, with continuing subdued real estate market, especially in big-ticket houses, the prime segment growth is almost flat or bare minimum. Focus of government is now on affordable housing and middle class. So now our strategy is to maintain our position in prime segment and look for growth in mid-market and affordable segment. We are penetrating and creating our position in this segment, for which we are expanding a lot on creating required infrastructure, etc. Here our priority is creating our position in this untapped market rather than high profitability. The strategy is long-term with bit short-term compromise on profitability. On YOY basis, volume growth in laminate was 10% and value growth was 29%. Major input cost of laminate is imported design paper and crude-based chemicals, cost of which both have sharply gone up in last 6 months due to rupee appreciation and upward crude prices. With introduction of new capacities in market, this increased cost could not be passed on, but now the stable rupee and downward crude prices, profitability will start to improve again. During Q3, MDF is operated at 78% capacity and for 9 months at 64% capacity. Reduced prices in the market have lowered the realization and profitability in this segment. We are likely to operate above 80% capacity in Q4. MDF has shown significant jump in revenue with growth of 85% YOY and 44% Q-on-Q basis. EBITDA margins for this quarter was 16%. However, we expect that further price correction of around 3% in coming quarter. But there is going to be saving on account of raising costs. So we are hopeful that we'll be able to maintain EBITDA margins somewhere between 14 to 15%. In MDF market, we are almost 8 years late in trend, but still could capture market equal to our 8 years old peers. Our quality is now set to be the best quality MDF in the market. As such, MDF market is fast growing and very soon demand supply gap will narrow down. This will lead pricing power to all MDF players. YOY basis, particle board has also performed significantly well with revenue increase of 58%. Despite with lower realization, EBITDA margins were at around 21%, better than Q2. Logistic business has faced issues of lower volume through, though average realization was on her side. Lower volume is attributable to new competitions in the eastern region. The net worth of the company stood at 935 crores as on 31st December. On debt side, even after taking major capex, company is still very low geared with long-term debt equity ratio of merely 0.2 against 2 accepted by the bankers. All other ratios are stable. As I said, we are now focusing on mid-market where raw material also is a bit different. Okume species of timber from Gabon is almost 35% cheaper than timber of Myanmar, which affect almost 5% of total cost of plywood. So in order to assure raw material linkage for our affordable products, we are setting up a timber peeling unit in Gabon. Planned investment is around 30 crore and expected commencement is after 6 months. With these words, I open the conference call for question and answers. As promoters of the company are on call, I request you to focus more on quality questions Queries relating to number, etc. can always be made to me or my colleague Mr. Rathi separately. Thank you.
Thank you very much. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Praveen Sahai from Edelweiss. Please go ahead.
Yeah, thank you, sir. Thank you for my question. My question related to the MDF. As your utilization reached to 80% and you also announced for the CAPEX further for another unit. Also, you mentioned about the correction in the realization.
Hello. Hello.
Hello.
Yes, can't hear.
Hello.
Yeah.
So, question is related to the MDF. As you had already mentioned that 80% of utilization you had reached, and also, explained about the further expansion in that. As well as also you had mentioned about the realization to correct for 2 to 3% further. So, as an industry, and also we, know there is a lot of capacity come in the sector, MDF sector. So, what, as in a sector, at what level of a realization to get and stabilize on if, the mismatch in demand and supply will continue? Are we expecting a further correction in this profitability to go down, sustainability of 14 to 15% of margin? Would it be a challenging way forward? Hello? Yeah.
So actually, we see that the prices have gone down. If you really look at the realization also, you will see that the prices have gone down by about 10% in last about 9 months, you can see. And in last about a month's time, there has not been any further discounting or special pricing in the market by any of the players. We believe that practically it has slowed down. The slide has also slowed down since October. And I think in the month of December now it has come to a standstill. So we don't think that there will be a further slide down, number one. Number two, because of all this price slide down, all those people who were not in the industry and were trying to come into the industry have thrown away their plans of coming into MDF industry. So that's a very positive point for us.
Okay.
That is number two. Number three, people like us who are in the industry, we know that everything is dynamic. The prices are dynamic, the capacity is dynamic, the market is dynamic, and that's why we need to actually envision that what will be the scenario, say, 2 years from now. So 2 years from now, absolutely whatever capacity we have built in will be short, and if we don't come up, somebody else will come up. So we should be ready with more capacity so that we don't give chance to others to come into the industry. And we are ready with the capacity whenever the prices improve or the consumption improve. Otherwise, somebody else will come in. So that is the reason we want to go in for expansion. And as far as the pricing is concerned, the pricing will only improve once the supply-demand scenario improves. So this is a very common cycle, I think, in every industry. It will happen with MDF also. When this green ply or action came, they made a lot of profit, a lot of money. But slowly, then when we came, even after that, it was well. But after that, when the new expansion of 1100 and 600 came by Action and Green, the prices went down. Now, but everybody is, I think you must be getting from others also, everybody utilization is improving, and improving actually dramatically, very frankly. So with that scenario in a year's time, we expect that we'll be through this scenario.
And to maintain this 14-15% of margin in this segment is a quite, achievable.
I don't think there is any problem as far as maintaining this is concerned, because we have done two more things actually. One is that we have installed a very expensive machine which has actually reduced our glue consumption by about 20%. And glue and electricity, these are the two main things which actually are a very, very big cost as part of MDF. The second thing which has happened, the glue costs have gone down. In last about a month's time, the glue costs have come down, so that will also impact our profitability in times to come. And the third thing is we had a problem regarding the pricing of electricity. So that also has been reduced to 5 rupees a unit now, and that will also help us in improving our profitability in times to come. There was a dispute between us and the electricity department that has been now resolved.
Okay, great. And coming to your, the main segment, that's plywood. There also, we had seen some pressure in this quarter. So, and also as for your commentary to more, if you move on the mid segment, definitely to sustain the historical high margin would be a challenging. So, what level of you are actually expecting to way forward with this, focus more on affordable things and medium range of apply?
You see, the top market, the market at the top of, or you can say, or of the, triangle, the top market is actually maybe 7 or 8% or 10% of the total market is at the top. So we are actually having over 25-30% market share in that department. So to grow in that heavily, yes, the growth is possible and it will happen, but to grow there heavily is not possible. That's why last year we have identified this the below segment, the second segment, which about is 45% of the total market in India. But for this, actually now we have to actually go into a completely different kind of selling, marketing. We have to go to the contractor. Earlier we used to go to an interior designer, now we are going to a contractor. Earlier we used to go to the top 10% or 20% dealer of the city. We are not going to 3-tier towns. Now we are going to 2nd-tier town and the 3-tier town. And all the other retailers, even in a Calcutta kind of a place, if we are represented by 50 people, now we want to go to 1,000 or 1,200 or 1,500 people only in Calcutta. So all these are taking time. So in that, actually, to make this inroad, we are compromising with our profit also a little bit at times, and it is taking time. But the things are growing. The numbers we are seeing, the way the work is happening in the market, everything is very positive. Yes, all this work takes time. It's not so easy. So we believe that in maybe a year's time, maybe in 9 months' time, you will be able to see the results in numbers. But till then, yes, we will have to keep our patience.
My questions.
Thank you. The next question is from the line of Shalani Salgaonkar from Jefferies India. Please go ahead.
So thank you for the opportunity. So my first question is again with reference to your comment on focusing on mid-market segment. So firstly, what is the kind of average price differential between the premium segment and the mid-market segment currently that you're targeting?
See, in premium segment, the price is about 120 per NA. And in the mid-market segment, it is about 95 rupees, you can say. So the price is down by about 25%.
Sure. So when you said that you want to grow and focus on increasing your presence on mid-market segment, how much do you think it will impact your average realizations, and will it impact your EBITDA margin in the medium term?
You see, how much will depend on how much we are able to sell the mid-market material. The more we sell, it may impact, because if we grow even a 10% volume, then the value growth is not equivalent. The value growth is much lesser. But as far as profitability percentage is concerned, in our company, we always fix the profitability percentage for every product, and we maintain that. So we are trying to keep it same, but because we are now trying to enter the market and very aggressively we want to go there, and we are actually not recognized into the customers or influencer of that segment, we have to compromise a little bit here and there. So that's why the profitability are a little bit hurt at the moment. But all those things we know very, very well. These all will be recovered. When we started plywood, we were selling about 11% cheaper to the price leader at that time. And today we are selling probably, I don't know how much higher to everybody else. So all these things are just a cycle, and to give you a quantum that how much adjustment in the value will happen, it is only the quantum of the mid-market segment. We expect mid-market segment for us to grow by at least 20-25% every year. That is what we are looking at.
Sure. So, and you also mentioned that probably you will have, it's a new channel as compared to the premium segment that you have right now. So, do you envisage expanding your channels, and will it affect your ad spends to any extent?
You see, the working in channel as far as Century Ply name is concerned, you see Century Ply and Green Ply, these two names across the country are known to probably every channel or every person, practically we can say. So I don't think we need to advertise or spend on advertising actually for that reason. But we have to work very hard because you have to convince each and every person sitting on there at that shop because he is the boss there. And to convince him and convert him into our product has been even earlier was a very, very big task. I have personally gone to many shops across the country, maybe 10 times, 20 times, and over a period of a year or two, and then I have converted them to Century Plywood. But nowadays, because Century is a name, but still it takes time to convert him. But it will not ask for much of an advertising. Yes, initially when we reach him, at that time he asks for a board or he will ask for a shop meet and all that. So all those are within the system.
Sure, sir. And my last question is, what would be your distribution touch points right now, pan-India?
For laminate, it is, I think, about 18,000, and for plywood, it should be around 5,000, 5,500 or 6,000, like that. But we are looking at both reaching, plywood crossing maybe 15,000 and laminate maybe crossing 30,000 in next about 1.5 year time. So we are absolutely, the whole energy of the organization is now invested in this single task, that our reach must be the highest and we should become kind of an FMCG across the country, and that is why it is taking that much of time.
Sure. Sir, this is helpful. Thank you.
Thank you.
Thank you. The next question is from the line of Shriram R. from Sundaram Mutual Fund. Please go ahead.
Thank you for the opportunity. So a couple of questions from my end. So the veneer facility in Gabon, if you could elaborate on the thought process behind setting it up, because I believe there is some coup which is happening and there is some unrest going on and all those things are there. And also, sir, if you could, elaborate us on the MDF unit which is going to come up, what is the capex and, at what point of time we can expect? Because, see, in one sense, you were just mentioning that, somebody else will put up the plant or something like that. So, but then, sir, on a ROC front, it's clearly dilutive for the organization, right? We will probably end up with, say, a 10-12% kind of ROC if this current, realization sustain. We ourselves are seeing about 3%, degrowth in terms of realization going further. But so, how do you please elaborate on the idea behind these things, sir?
First, I will take the Gabon, and I will request our chairman, Mr. Bhajanka, to take the Gabon question, actually.
Yeah, your apprehension about the coup. The last coup took place in Gabon in the year 64. After 64, that was the first attempt, maybe after 50 odd years, and it was contained within few hours. So even the president was out of Gabon. In his absence only, his loyal, they controlled the coup within few hours, and the people involved were either captured or killed. So this is absolutely normal, and it is one of the most stable country in African region. So, and again, we reviewed the situation and we were assured from all the angles. And our main idea behind putting up the unit in Gabon is raw material security. Because even if Myanmar restored to old level, and even if Laos, they allow export of veneer again, but it would be carrying veneer. And carrying timber, carrying veneer, it is comparatively very costly in comparison to Akume from Gabon. So in that situation also, for certain products, now onward we shall use Akume only, which will reduce our cost. And the cost of the timber in Gabon is comparatively low. So, and yield in Akume is very high. So that way, this would be a unit which would partially meet our raw material requirement. And if like Laos do not resume, then it will be mainstay of our veneer requirement, such veneer requirement. And about MDF, now is suppose today we decide to put another unit or expand capacity in our existing Hoshiarpur unit, it will take more than a year. And the way we are seeing the market is growing, the growth in the market was very hefty. So we are apprehensive that if we do not initiate now, then we may be a little late. And as Sanjay already explained to you, we don't want to the other people entering this arena. So from industry, now impression is this, that is overcrowded, there is surplus capacity. So most of the people, they have abandoned their plan to enter MDF. And in this situation, we don't want, or would we either expansion in the existing unit, like our Hoshiarpur unit, we have a capacity of 600 cubic meter. So we may add 3 to 400 cubic meter, another capacity with less investment. For this, we have spent around 350 crore plus for existing plant. But the new capacity would be 100, 120, the cost would be 125 to 30 crores, and which will add another 60% capacity. So that way it would be cost effective also. But we are very, very careful, and we got another license for UP, for MDF also, and for particle board also. So for time being, we have decided to go ahead with particle board only. MDF for UP, for time being, we are keeping in abeyance. And after seeing the situation, seeing the market for another 1 year, so first only existing plants capacity, we may take decision very soon. And about a greenfield expansion, that we will decide later on.
So what is the capacity for the new particle board one, and what will be the capex for that?
Particle board, we have not yet closed, but if it is not continuous press, then it could be around 400 cubic meter per day. And
the indicator capex, sir?
Then it will be around 100 crores. For 400 cubic meters, it will be around 100 crores.
Fine, sir. On the plywood space, if you could bifurcate in terms of volumes, like currently, what is the portion of premium, mid-market and affordable, and how do you see it, say, 3-4 years down the lane?
Presently, about 50% of the quantity is, or rather little more than 50% quantity is actually the top premium grade quality, and about 10 to 15% is the second level, which is actually complementing the premium grade. The rest of it is actually either MR grade or the Scenic 710 grade, which is the mid-market segment. And going ahead, of course, we feel that the market is at least 4 times. So maybe in a few years' time, we should be seeing that this mid-market segment should be at least double the premium quantity.
So that would mean, sir, we are probably shifting our focus away from the premium segment. So that would mean that the margins that we have enjoyed before may not be sustainable. Is that correct?
No. The premium, you see, the company's policy is to keep the percentage of profit in most of our product is same. For the moment, for our aggressive intrusion in the market, we are compromising a little bit with the medium segment. But ultimately, in our company, we have always fixed the margins and worked with them. So I don't think that it will hurt our margins in times to come. Rather, it will augment a lot because our selling expenses are not going to increase. We have already 700 people strong team across the country. So we don't need to increase these people. And if the sales totally doubles, you have to understand that actually our profit has to increase. Our costs in every other respect will come down.
So the reason why I'm asking is, sir, for this quarter, your EBITDA without Forex is about at 13%. Sequentially, it was at 15.7% for the September one. So what is the thing? This is why I'm asking you that question, that whether we would see this kind of 13-14 is the sustainable margin going forward because of your focus getting shifted.
See, I think you must have seen our company for last at least 3-4 years. So all this little bit up and little bit down are a industry phenomenon, and I think nobody has a control. No industry or no management can have a control. Sometime one particular area like our Assam factory, the prices have gone up for a few months. The cutting has been slowed down because of some local movements. The politics took some kind of a turn. right now you are going to have elections next 3 months. You do not know what is going to happen and what is going to be impacted. So I don't think we need to be perturbed about this small changes in all these things. But we are sure, because we have actually proved in our last so many years that we have come down and we have again climbed up, because basically the fundamentals of the company or our sales and our brand are very, very good. Our quality is recognized across the country. It has to come back, you see. And anybody else, any other competition to take up and come near this brand is very, very difficult. He will have to invest maybe not only money but a lot of years behind it to reach this level. So there is no reason for us to come back actually. And if you want me to give you a data on this, I can always give you a data, but all those data will be in the perspective of tomorrow, which are assumptions.
So fine, sir. One last question, sir. What is the debt level, sir? Long-term and short-term put together?
Arunji.
Yeah, total debt level, including long-term and short-term, is around 468 crore.
And sir, the capex which are coming up, how would be the funding? Internal accruals or?
In fact, frozen capex is only around 30 crore this year.
Yeah.
Balance capex, and around 80 crore in next financial year. So for that, we don't need funding, in fact.
Fine, sir. Thank you so much, sir.
Thank you. Participants are requested to limit their questions to 2 per participant. Time permitting, you may come back in the queue for a follow-up. The next question is from the line of Shrenik Bachawat from JM Financial. Please go ahead.
Thank you for the opportunity, sir. So my first question is relating to plywood. So going forward, what will be the sustainable margins in FY20?
For plywood, sustainable profit margins, we can't say at the moment, because it will depend upon what product mix we are going to have, strategically of prime and affordable. As we said, we are focusing more on affordable segment, where at the moment we are compromising on profitability. And I mean to say, projecting EBITDA for FY20 is a bit difficult at this juncture, because a lot of dynamism are there, in fact.
Okay. And sir, in MDF, the realizations have dropped 3% QOQ, but our gross margin is up by 800 beeps to 33%. So is there a drop in raw material cost for MDF, or I can't understand the change?
Yeah, in MDF, there are 2-3 positive factors took place. One thing is that the price of glue has come down. In between, we are buying glue at 20 rupees. Now it has come down at 15 rupees. Then, as Sanjay explained, we have installed some very advanced glue technology, and which is reducing our glue consumption by around 20%. And then the electricity, there are 3 major cost factors in MDF. There is timber, electricity, and glue. So timber, again, because it was our first venture, so we have assumed that this much timber would be consumed. But later on, what we found, we have around 5,000 plus ton of timber surplus. That means what we are booking, actual consumption was much less than that. So now we have calibrated the consumption of timber accordingly as per our past experience. So there is also saving of 10 to 15%. So on timber we are saving, and the price is flat. At what rate we started buying that time, the same rate we are paying now. So timber is flat and consumption is around 10 to 15% less. Glue prices have come down. Electricity, initially we were paying 6 rupees 50 per unit, but there was a policy declaration by Punjab government that to industry they will give at 5 rupees. So they didn't implement it initially, but now they have implemented it. So our cost has come down to 5 rupees per unit, and we are getting exemption for the electricity duty. So it would be available up to 70%. of our fixed cost, along with the GST exemption for the state part for the sales in the Punjab. So those benefits are there. So that way cost has come down a little bit on glue, on electricity, and on timber. So that is, and like overheads and other, with increased utilization of the capacity, the overheads are coming down.
Okay, sir. And sir, how is the MDF industry grown quarter-on-quarter basis? How is the MDF industry done overall?
Yeah, at the moment I don't have data for the industry as a whole, but
are you seeing an uptick in demand?
Yeah, the demand is better, and we are now catering to many sectors. Now we are making waterproof MDF, exterior grade MDF, and thicker, thinner, and in between where we started embossing the MDF, the embossed MDF. So we are wherever we have commissioned our laminating plant in Hoshiarpur. So pre-laminated this thing would add further value. So that way, wherever possible, we are trying to improve our realization and capacity utilization.
Okay, thank you so much.
Thank you. The next question is from the line of Madhav Mata from Fidelity Investments. Please go ahead.
Good afternoon, sir. So I had two questions, one on the plywood and one on the MDF side. On the plywood segment, as the early participants have already asked, on the shift towards the mid-segment plywood from the premium segment, could you just help explain on a gross margin basis, just since you're saying raw material is cheaper for the mid-segment plywood compared to the premium one, just on a gross margin basis, how much is the differential between premium and the mid-segment plywood?
Are you asking about the price or the margin?
Gross margin, so adjusted for the raw material cost, because you're saying raw material is cheaper for the mid-segment plywood?
Yeah, but accordingly the prices are also lower.
Correct. So if we adjust for both the lower price and the lower raw material cost, per unit basis, are the gross margins similar for both, or is it lower for the mid-segment plywood?
You see, I have explained earlier also that the company policy is as far as percentage gross margin or percentage net margins are concerned, we always try to fix it up and maintain the same for all the products. At some times, depending upon the life cycle of the product and the market situation, we have to adjust somewhere. Sometimes we get a little bit higher, sometimes in certain things we get a little lower. But the policy is actually to maintain it equally for all. For mid-market segment products, at the moment we are compromising with the profitability a little bit.
And
so
how
that
much
we can
is
make a very...
broadly?
Now that differential will be not much, maybe... Actually, whatever I say will be wrong because I don't have the perception right now that how much is actually. So you can ask it later, and I think Abhishek Rathi can tell you.
Sure. Okay, and just secondly, sir, you're saying that if I understood correctly, you said selling expenses will not go up as we scale up the mid-segment plywood because our sales team is already in place. But in my understanding, given that you're saying you need to expand the number of retailers, go into tier 3 towns, etc., your sales force will have to go up, right? Because with the same number of people, you can't cover the higher number of retailers.
It is not right now. What is the job of my sales team? The job of my sales team is basically to meet my direct dealers. But these dealers, these shops I am talking, are actually not direct dealers. They are indirect dealers or they are retailers. They are actually buying from my dealers. So what I am doing is actually now connecting with them and actually joining him with my dealer. And now my dealer gives me a report on a monthly level or a weekly level that how many of them have bought. So I go to a dealer now who actually is not buying. Try to understand. So we have reversed the game totally.
Okay.
So I don't have to go to the whole area or everybody in that area actually. We have now, we are able to find out or pinpoint exactly who is not buying. And then we try and pursue him first over telephone. And after that, if we find that the telephone is not working, then we go. Because already, before we join him, already 2 to 3 visits have happened. And that is why you see it is taking so much of time. We have to go, we have to meet. We cannot meet all the 50, 60, 70,000 retailers across the country so soon with the 700 people. And even if I increase the number of people, I have to train them. I have to have a quality manpower, which is again not possible. Then I have to increase my supervisory.
So which is why I say that you might have to increase your sales staff at some point, right? Because if you have to expand into new towns and dealers, you need more people to handle the increase.
Our people are there. Like if you go to a Banaras, or even if you go to an Erode, or you go to Jammu, or even if you go to Srinagar, my people are there everywhere. That is what I'm saying, that we have actually tried our best earlier, and now because of this mid-segment, we are able to get into a shop which was earlier not interested in Century Ply, because Century Ply is perceived to be a product which is very highly expensive. But now he sees that, yes, it is possible. They have come out with a mid-segment. Mr. Bhajanka wants to say something.
Here, I would like to add one point. So far, we were underutilizing our marketing force. So now we can utilize them a little better.
Okay. All right.
Yeah,
so
absolutely. Absolutely.
Just on the MDF, my second question, just on the industry, if I just think, of course, early participants have been asking this question, but just fundamentally, if I look at an industry, don't you think this is a low barrier to entry industry for new players? Like, they may not come in for the next 6 months if Century Ply, comes in and puts a big capacity, but this threat will always be there, right? Because it's, there's no big barriers to entry.
Which industry does not have a threat?
Exactly, sir, but more so for MDF, right?
But then look at it, that before they came up, they were trying so hard to take away my people. The person I was paying 40 lakhs rupees, they offered even 70 lakhs rupees and told him that you come tomorrow and I'm signing an agreement with him. All of them have stopped calling just because 4-5% or 3% prices dropped. So by announcing further capacity, we are actually putting the last nail in the coffin. All these people will now see, Arre Baapre, now to Century Plywood is coming with one more. Already the existing capacity is unsellable and these guys are mad. Why are they putting up more capacity? And so that is what they will think. And let them think. That is what we want them to think.
Just one follow-up on this, sir. But given that at some point, if you take back the margins to say 20%, if that's the view, say 2 years, once the demand supply becomes more favorable, then again this threat will come back, right? But I'm just saying, can we go back to that 25-30% margin that we had like 1.5 years back, or it's going to be a 15-20% business?
Oh, and anda ki murgi. So, will go on. But at that time, we will get at least 2 years' time, because anybody coming into the business will take at least 2.5 years to get into this business, and we will enjoy those 2.5 years.
Here, amongst the big players, we are the late entrant or the latest entrant. And in spite of that, our capacity utilization is better than all the existing players. So, to some extent, our brand helping us, our dealers network is helping, and our methodology and mechanism which we are applying in Century Ply, that is helping us. So, for a player in the industry, so fortunately or unfortunately, there is vast gap between number 1, 2, and after that, number 3 is far behind. So, amongst plywood industry, Century is number 1, Green is number 2, then number, suppose our turnover is 1,500 crores for plywood segment, then the number 3 turnover is less than 200 crores. So there is a vast gap between the top 2 and then the next player. And similarly, like Action, so they were big player in Suj and some other these things, and they were already big industrialists. But apart from them, all the existing players in plywood, they come in the small and medium range. So for them to decide for a big investment of 400-500 crore rupees, it is not that easy. And the new people, for them, there are many more industries where the profitability is very high, other thing, the challenges are less. So they will go to those industries. They will refrain for coming to MDF if we are not creating any space for them. If we are keeping the market fully fed, in that case, for new people, there would be less incentive to come into the MDF.
Got your point, sir. Got it. Okay, thank you so much, sir.
Yeah, thank you.
Thank you. The next question is from the line of Ronil Dalal from Ambit Capital. Please go ahead.
Hi, sir. So I had a few questions on MDF. So you had mentioned that glue, electricity and timber were major costs. Would you be able to tell me what percentage of the total cost that would be for MDF specific?
Around 50%.
So So
these
all
three
together
okay. Is around 50%.
And timber out of that would be how much of the 50? Or of the 100 rather?
Timber maybe around 50%. So say 100. It would be around power would be 20%, glue would be 30%, timber would be 50%.
Okay.
Of the cost, and together they are 50% of the total cost.
Got it. Okay. And so, sir, also that like this, we have done a different type of technology we are using. Similarly, are there any other technological differences that you all have been stressing on or maybe focusing on versus some of the unorganized players, like say like a dry and dip or say core veneer composers? I've been hearing these things this last few months. Are there any such technological advancements or steps which we are taking to be ahead of the unorganized players and some of our competitors? And could you specify some?
Here, like MDF. So, at the moment, there are two technologies in work. One is continuous press, conti press, and another is delight press, multi-delight press. So, only three of us, Century, Green, and Action, we have conti press. And rest other players, they have delight press. So, conti press, quality is better. Country press, the wastage is less, like sending wastage, other things, or in comparison to delight press is less. But cost-wise, country press units are costly, like installation cost or the capital cost. For the country press technology, per unit of production is comparatively higher. And multi-delight, say they put a plant for 100 crore, which may have around 200, 250 CBM capacity, whereas for 600, we have to spend 350 to 400 crore. And Green, I think they have spent more than 700 crore for their new line in South. And similarly, Action, they have also purchased the new line that is again comparatively more costlier than their earlier line, which was the earlier technology they were using were multi-delight press. So this new addition is the conti press. And like in plywood, there is no rocket science involved so far. It is more or less the same technology, same press, and the core composure and these things are mostly to improve the quality. So if we are composing the core, we are jointing it, then composing, then there won't be any gaps in the plywood. So this endeavor is mainly to improve the quality, which in Century we always try to improve the quality with some better management without cost is preferable, but sometimes incurring higher cost also we try to improve the quality.
Okay, sir, and sir, is MDF eating into or cannibalizing into, say, for example, a lower end ply, or are you facing any cannibalization from the MDF?
There would be, even if we are not facing much now, in future there would be, because the China, last year, the total their capacity was around 50% was in plywood, and in million tons, so their 60 million ton was the plywood capacity, 60 million cubic meter, and 40 million cubic meter was their capacity for MDF, and 20 million was the capacity for particle board. So MDF and particle board was almost equal to plywood. In India, plywood the capacity is around 10 million, and MDF and particle board together now it is less than 2 million. So there is long gap if we compare with China, and in Europe this is further lower, the plywood capacity. So their ratio is 75-25. The engineered products like MDF, particle board, OSB those are occupying 70% space, and plywood is less than 25%. So India won't be exception to this in future, but there is one solace because our overall capacity, the consumption per person is very less. Whereas in Europe, Japan, other countries, per capita panel consumption is more than 50 square meters, whereas in India still it is 2 square meters. So there would be vast growth, and that growth will come mostly in the engineered product like MDF and particle board, and plywood would also grow. So there would be the growth rate in plywood would be slower in comparison to MDF and particle board. MDF and particle board for a couple of years would grow at 40-50% percentage on the capacity term, and whereas the plywood would maintain 5 to 10% growth.
Okay, sir, and just last question that international, so last year in 2018, 40% of MDF was imported despite all the capacities that have been added. So international prices of MDF versus India, how much cheaper would they still be? And the second one is that what I was understanding that Okume has become very popular since the introduction of dry and dip technology. And because of that, the prices of Okume have also gone up a little bit, and also the supply disruption at Gabon. So just anything on these 2 points?
Like the earlier also, until 2010, India had only 200 cubic meter capacity. That Mangalam and...
So I'm sorry to interrupt. We are getting some echo. So if you and Mr. Sanjay are the same conference room... Thank you.
Yeah, now it's okay.
Thank you.
So that until 2010, India had only 200 cubic meter capacity. Then 2010 to 2013, press capacity of 1200 cubic meter was added. And that entire 1200 cubic meter was absorbed by the market. And in spite of that, imports were growing at the rate of 50% per annum. So there is the vast appetite for these products in India, and now also prior to Green's commissioning, which they have commissioned in the late 18, prior to that there was only one MDF unit in South India, that was Russell, and one particle board unit that was not functioning. Now it is closed down due to, and I refer to NCLT, that Associated Decor. So there were only 2 major units. So particle board, yes, we have entered, and again in entire Tamil Nadu, we are the only particle board manufacturer. And so that way, and the entire, except the North India, you start from Calcutta, go down, then Kanyakumari, and then come up to Gujarat. Every 50-100 kilometers there is a port. So import is much more cost effective and much more convenient. So all the coastal cities, they are still resorting to import. And after Green entered the South Indian field, yes, there is enhancement in the capacity. But prior to that, in South India, capacity was very less. And material moving from North India to South India was not cost effective. And the import was comparatively cheaper in comparison to material moving from North India to South. And Akume, yes, it is cheaper. Akume is cheaper than carrying, so it will replace carrying to a big extent. And there are many units in Gabon. Many Indians, they have gone there, and with multiple lines. And there the timber supply is mostly by one company, that is Olam, who has established the industrial estate in Gabon. So they have vast lease from the government. And the best part in favor of Akume is that the concentration of Akume in the forest is very high. You can say this is a country which is rich in the single species. If you take the carrying, in Myanmar there are so many other timbers. In Laos there are so many other varieties. In Indonesia, Malaysia. So it was not that carrying was more than 25% of the total species. But in Gabon, Kume is more than 75-80% of the total number of spaces available there.
Okay, sir.
Yeah.
Thank you so much.
Thank you.
Thank you. The next question is from the line of Sneha Talreja from Edelweiss. Please go ahead.
Good evening, sir. Thanks a lot for taking the question. It's pertaining to the plywood.
Sneha, you're not audible.
Can you hear me now?
Yes, thank you.
Yeah, so as we said that we are focusing more on the mid-end segment, just wanted one clarity that despite we said that, we will be compromising on the prices and we would be focusing more on the volumes, why is our volume growth in this particular quarter only 7% compared to, in the previous 2 quarters we had grown at a much higher rate?
I think I have already detailed this actually, because this requires a completely new effort in the market, because we have to now reach out to new dealers, new geographies totally, and for our people to really convince them. Initially, yes, few of them were known to us, so it was very easy to maybe make inroads, few of them, and later on it became very, very difficult. So initially, it was because our people knew we were dealing with 50, they knew another 20, 30, 40 people, so it was very easy to introduce to those 40, 50 people. But now going beyond this 100 people to reach this 800 or 900 people is not that easy job, because those people have a blockade in their mind that Century is very expensive. So now going to them, talking to them and convincing them is a task. And number 2, we have to go to the next level also, because the contractor, who is a decision maker, also must know and understand that now Century Plywood is a company which is actually which is producing and marketing a product which can be used by them. It is no more a product which is very, very highly expensive. So convincing, informing is a different thing. We can send an SMS, but nobody reads an SMS. We can just advertise. Today in the so much of advertising, nobody will actually even hear or really have that perception, exactly conviction in their mind. So we have to really meet each and every contractor, not once but maybe twice, to make this point in his mind. So that's why it is taking time. But the road, we have seen that the results are very good. Wherever we are doing it, the results are very good. But yes, it will take time. The initial phase, it is faster. It's now slower. Then next time when it goes faster, it will go much faster. But yes, that will take some time. And I think Mr. Bajanta wants to say something.
Here, I would like to throw light on one another angle, that GST. So prior to GST, there was vast gap between them and us. There is Indian, the market is divided mostly in favor of unorganized. They earlier had around 70% capacity, and we had only 25% capacity, the organized market. And the cost, only for one factor, that is taxation, there was an additional burden of around 30% on us for the taxation, excise and sell tax. And mostly the unorganized units were in the exempted sector. They were in SSI. Out of 3,300 or 3,200 SSI units, 2,500 were totally exempted and 700 were partially exempted. So this GST has reduced our tax burden from 30% to 18%, and now there is not a single exempted unit. All unorganized units are now paying tax. They are in the ambit of GST. They have all been registered. They are issuing GST challans, waivers, and they might be cheaper or they are undervaluing, but still not even 18, they are paying at least 10% duty, 9 or 10%. So for us, it is reduced from 30 to 18%. For them, it is increased from 0 to 10%. And this has narrowed the gap by around 20% between us. So we have become more affordable. Earlier, it was difficult for us to play in the mid segment due to the vast cost difference. We were minimum 50% costlier than the unorganized player. But now this gap is narrowed down, and we can take liberty to create a new segment which is in between to unorganized and the organized. So that is mid segment, which Sanjay was contemplating now.
So got that. So thanks a lot. And second question was relating to the CFS segment. In the last 2 to 3 quarters, we have seen volumes on this particular side, dipping a lot. Can you specify what has been the reason for slower growth in this particular business?
You might have heard about this thing. Earlier, there was a lot of congestion in Kolkata, and particularly in the port area. Road conditions were very bad. And due to that, a lot of accidents took place. So, this Kolkata police, they have restricted the traffic of containers in the port area, and due to that, there was huge congestion, and a lot of imports shifted from Kolkata to Haldia. And our catchment area is only Kolkata port, because both the CFSs are located at Kolkata port area. That was one reason of reduction. And then there was a bridge connecting the South Kolkata and North Kolkata, Majarat bridge, that collapsed. After that, again, there is tremendous pressure on the traffic. And then one new player has entered, that all cargo, they have also started operation in Kolkata. So some container cargo, some load they have taken. And so these all are the factors: less import, new player. And this new player, this will continue, this factor, it will hound in future also. And maybe now we have to compete, so we are losing on volume and value both as well.
Sir, hi, good evening. Sir, Rohan here. Sanjay ji, thanks and nice to hear from your side on the business. Sanjay sir, you have been in a plywood and running the business from such a long time, and you are seeing that the journey which you are going now from premium and plywood to now getting into mid-segment. Sir, in this journey, probably most of the consumer items we are seeing that dealers are moving upward and premiumization. This is plywood is a segment probably you are seeing that they are getting into lower end value added, lower end segment, or overall realization for the dealers will be coming down. Before you, he was probably dealing with the unorganized sector where margins he was enjoying was even higher, maybe 30, 40, 50%. I understand probably your margins will be much lower than offering to dealers than what he was enjoying with the unorganized. Sir, in this all scenario in the journey, what is happening to dealer? How he is able to survive? And are you seeing that there is the continuous pressure on a dealer and the closing down happening in the street? Hello.
It is a very difficult question you have asked me. There are one thing I would like to make clear, that the growth which we are envisaging in the mid segment, it is not at the cost of the premium segment. Premium segment, we shall grow. Maybe the growth would be limited to say 5, 6, 7%, and mid segment growth would be much higher and much faster. So that is our strategy. We are not compromising with that. We are not giving up the premium sector. That will grow. That is our, there are many dealers, they take pride in dealing with our premium products, and they cater to the premium architects and the premium customers. So that will continue, and rightly said by you, the market is moving towards premium grade also. There was a time the share of the organized, unorganized was 10-90. Organized was only 10%, unorganized 90. So from there we are moving, and now I'm sure that already we have crossed the threshold of 30%, the organized player, and then we shall reach 50% of the total market, and where the vast of the growth will come from the mid segment, but the premium segment would also grow.
I think I can clarify this. We are not looking at increasing the market, the total universe or the total market in mid-segment. What we are only simply doing is there is a market. All these dealers are dealing in those products. We are only elevating them a little bit. Whatever the customer was buying, suppose a 70 rupees or a 75 rupees item, now we are telling them you buy an 85 or an 87 rupees or a 90 rupees item. The guy who was buying 85 rupees item, he can buy a 95 or a 97 rupees item. And so we are saying that because the difference between a branded and unbranded earlier was too high. So a person who was buying an unbranded could not even think of buying a branded product. Now, because of the GST and we coming into a mid-segment, it is possible for him to upgrade. Earlier, the thought of upgradation was not possible. So actually, as far as the business of the retailer is concerned, that is not under any threat at all.
But sir, I'm sure that...
sir, I'm sorry to interrupt. May we request you to come back in queue for follow-up questions? Thank you. In the interest of time, participants are requested to limit their questions to one per participant. Thank you. The next question is from the line of Yash Gupta from VP Enterprises. Please go ahead.
Thank you, sir, for the opportunity. My question related to MDF. Does we have started any additional capacity in Punjab unit? And is there any additional capacity in overall industry of MDF this quarter?
This quarter, not to my knowledge, and even in the next quarter, there is no new capacity is, I think, coming up. And ours, we are just still, we are at the discussion stage about the Punjab. Earlier, when we started, that time we were willing to go for the expansion immediately. But after that, after the Green started this new plant, South India, and the Action started new plant, and there was huge surplus capacity, so we shelved out that project at that time. So we are taking it from there only. That time we planned everything, we did the engineering, we did this thing, whether it is possible to install another 400 capacity in our existing plant. So that we positively concluded. So that we are now contemplating to just if we go ahead with that. So that is at that stage. And like UP, we got the license, and there is now 2.5 year time allotted to us to start construction. So that way we will take decision at the appropriate time. And to my knowledge, only one plant, big plant, Country Press, has been ordered from India. That is by Russell Decor, and that is somewhere in the Hyderabad side or Vijayawada side of the Andhra. So that side they are planning. But they will take minimum 1 more year to complete the plant. So anything would come, maybe it would be beyond 1920 or in the fourth quarter of 1920.
Thank you. The next question is from the line of Ravindranath Nayak from Sunidhi Securities. Please go ahead.
Thank you for the opportunity, sir. Sir, my question pertaining to this plywood business. So your realization, overall realization as per the presentation has gone up by 0.7%. And you are saying that you are concentrating more on the mid-segment, so which is a lower realization. And secondly, there are news that the popular prices, wood prices, has gone up in the year. Hello?
Yeah, please. Yes,
hello? Yeah, so popular prices has gone up in the year by December. So whether that is the one reason that there is a 500 basis point decline in the gross profit margin of your in plywood business? So please explain this in terms of the product mix, because the realization is actually, overall realization has gone up by 0.7% and gross margin has declined by, in quarter to quarter, has declined by 500 basis points.
Yeah, so just one thing, the first part of the question was that the realization has increased by 0.7%, and the second part is that why is there a 5% gross decline, right?
Yes.
You see, the cost of the raw materials has increased. As we already mentioned, the cost of all phenolic resins, anything that is crude related, has jumped up. While this has a much higher significance in the case of laminates, it also plays a role in the case of plywood. So in the case of plywood as well, the cost of certain raw materials has jumped. Alongside that, like we have already mentioned, our Guwahati unit earlier had various tax exemptions, etc., which are now over. And as such, the profitability from the Guwahati unit is slightly reduced. coupled with an acute shortage of raw material there, which is a temporary phenomenon that has led to lower profitability from Guwahati and a higher tax burden on us for this quarter. Alongside this, like you said, poplar prices have gone up, and as a result, what has happened is the material that we were trading, or the lower quality, the Scenic that we were procuring from the market, Scenic MR, the cost of that product has increased. So all three of these put together have reduced our profitability. So we are looking at ways and means to increase profitability. Immediately hiking the prices is something that we decided against, because right now we are trying to gain market share and trying to ensure that we are in a first position in the market. So right now, for the short term, margins could continue to look a little lower, but I'm sure that in the near future, maybe over the next 2 or 3 quarters, we'll again be able to take margins higher.
Thank you. The next question is from the line of Manoj Baheti from Omniscient Capital. Please go ahead. Manoj, your line is unmuted. Please go ahead with your questions.
So I have a couple of questions. My first question is, like, in the industry, significant investment is now happening on the MDF side, which is much more capex intensive and as of now not ROC accretive. So how do you see the ROC trajectory of the company? As well as I also wanted to understand that what is the hurdle rate which you consider while approving the investment in the MDF segment?
You see, typically for any new investment, we look at an ROCE of 20% plus. Having said that, it must be realized that the market is dynamic. Today, we talk of the expansion of MDF. The earlier plant cost us close to 350 crores for a capacity of 600 cubic meters. Now we are talking about an augmentation of capacity of 67%, that is 400 cubic meters, at a cost of 125 crores. So the ROCE for the business will be determined by market forces. But as per us, within the next year, year and a half, as this capacity gets absorbed, we'll be back to ROCE of 20% plus.
Thank you. The next question is from the line of Pranav Mehta from Qtr3 Securities. Please go ahead.
Hello, sir. Thank you for taking my question. So just wanted one clarity. Have you dropped your capex plan for the door project? Because it was not given in the presentation. Hello?
ना तुम लाइन में नहीं वो ले लो.
Hello.
Hello.
Yeah, hi. Actually, for now, we have sort of put the door plan on hold because we have realized that we tried to do a pilot round and we found that the current demand for this is not as much as if we would be able to put a plant right now. So we are continuing with some imports, but plant we would probably take a call by the end of next year.
Thank you. The next question is from the line of Prateek Poddar from Narnolia Financial. Please go ahead.
Yeah. Hello, sir. Hello.
Hello. Hello.
Yeah. I have a question with regards to capex. So, as I can see in the balance sheet provided for 9 months, we have shifted around 110 crores from capital work in progress to fixed assets. So, can you just help me on what this 110 crores relates to?
This is basically for the corporate building we have constructed.
For the corporate office building.
Corporate office building, yes.
And sir,
yes, for corporate office building and laminate expansion. Mainly, this is for two.
Okay. So, just in continuation to it, the rise in the depreciation run rate is because of these two shifts, right?
Yes.
We expect this to continue.
This will continue, of course.
Okay. Another thing, sir, I was just looking after the working capital scenario, and our cash conversion cycle has increased a little bit. So, can you just help us to understand what is the...
It's mainly due to decrease in payable days. You know, in order to de-risk ourselves from foreign exchange risk, we are constantly reducing our liability on account of foreign exchange risk. So we are availing less credits, less usage credit, less bad credit, because foreign exchange scenario now is not in last 3 months or not stable. So instead of hedging, we are paying upfront.
Thank you.
You got my point?
Yeah, yes, sir. Another question that I had, sir, is with regards to the plywood facility that we were planning at Punjab, and I have seen that it has been shifted to FY20. The whole capex has been shifted from FY19 to FY20. So can you just help us?
In fact, we are going slow on it. You know, Mr. Badenka will like to answer this.
Actually, we have taken another strategy. Like in our all existing plants, we are upgrading them by installing core composer and big glue spreaders to improve the quality and to make the plywood gapless. That is one thing. And at the same time, like earlier, the technology available and utilized in India was 10 daylight presses. So mostly the 99% presses in India were only 10 daylights. And in our factory, all the factories which were established 7-8 years back or prior to that, we had only 10 daylight presses. And now the 20 daylight presses are available. So at the same space, with the same labor, we can operate 20 daylight press instead of 10 daylight press. So we are now replacing 10 daylight press in our factories, existing factories, by 20 daylight presses. So that way, that is unleashing releasing lot of capacity, and new capacity we are getting amongst in the existing plants. And Punjab, that we have license for plywood, and earlier we thought of using putting up new capacity. Then very near to Punjab, in Karnal we have a factory. In Haryana, that is Karnal is almost Punjab-Haryana border, and that side at Roorkee we have a factory. So for time being, we have sold that project of plywood in Punjab, and we are enhancing capacity in all our existing plants.
Thank you. We will take the last question from the line of Ashish Podar from Anand Rathi. Please go ahead.
Yeah, thanks for taking my question. My question is regarding your ply mix. So are we saying that that we are going to increase outsourcing? And when we are saying mid segment, is it pertaining to the Sanic segment, or it's a different segment?
Yes, Sanjay, you are online. Hello, Sanjay. Okay, Keshav will take.
So could you just repeat that once?
Yes, so my question is, when we say mid-segment, is it the Sanic segment or it's a different than Sanic segment?
Mid-segment is the Sanic segment.
Okay, so
we are categorizing this within 3 segments. The very top end would be Century Club Prime. Below that would be Bond. Bond would be lower end of the higher segment. And Sanic would be the lower segment.
So we are not thinking of going below the Sanic segment, or we are talking about that?
No, we are not.
Okay,
It's going to be a fighter product within the mid-segment of the market.
So why I'm asking, because looking at your competitor who has gone below that segment, the Jansati and Bharosa, and my sense is that they are not getting good volume there. So I just thought to clarify whether we are going to focus on that segment or not.
Our problem is that at a segment, any segment lower than Sanic, to guarantee quality would become a very difficult task for us. Because at that price, to produce a quality product, for us at least, it is impossible. I don't know what people who are partaking in tax arbitrage, etc., being able to give out, but I'm sure the quality of the material is not up to scratch. So we are not partaking in that segment of material at all. We are restricting ourselves to the Sanic segment, which is a high quality product that we can guarantee at that price.
So what is the outsourcing mix as of currently, and how do you envisage in next 1 to 2 years time frame?
Within all our products, Sanic MR is the only product that we extensively outsource. All the other products within the Century basket are being manufactured in-house. Going forward with Sanic MR, I think we will increase the exposure in terms of outsourcing, because this is a fast-growing product. And in the future also, we are looking to outsource most of Sanic MR. Whereas with Sanic PF, we are going to be manufacturing most of it in-house. For exact volumes, Mr. Julasaria can update you later.
Okay, sir. Thank you so much.
Thank you. That was the last question. I now hand the conference over to Mr. Sanjay Agarwal for closing comments.
Sanjay, I think he is somehow disconnected. So I'm Sajan Vajanka, chairman of the company. I thank everybody for participating in this telecall, and I thank SBI Capital for organizing this conference, and it is very nicely organized, quality of voice, and like conduction was very, very good. Thank you very much. Thanks to all the investors and analysts. Thank you.
Thank you very much.